Hey everybody, good to be back here with you for Markets and Sectors Analysis. My name is Mike Fairborn. Plenty to discuss this week as we've been looking at all kinds of different, economic announcements. We had the announcement from the Fed, a 25 basis point cut. What's happening in the economy and how are we basically seeing other companies out there on a non-market weighted basis? How is the breadth of the market doing? Actually, some surprising results we'll see in that. As we'll take a look at that, as well as some other details. Got some technicals to show you too within the broader market, some newer technicals to take a look at, some new things that are just popping up. So hopefully give us some ideas of what we can look forward to maybe into next week is what we like to do into this class. So we'll also look at earnings beats, etc. See what we had this week. We'll go from there. But welcome to all of you. Good to see some familiar names in the chat, of course. Any questions or comments that you might have, definitely put those in the chat so we can address those for you, folks. Any topic requests or anything that you're seeing out there in the market that's of interest to you, throw it in. We can take a look at it too within just the chat. So I'll keep an eye on that. Would also like to say hello to a very good friend of mine who is helping us out in the chat today, Cameron May. Folks, you can follow Cam and I on X. You can see it posted right there, Cameron May CS, Mike Fairborn CS, into our X handles. I just recently posted one today about some of the yields in the Dividend Aristocrats. So with that, let's turn to over to some disclosures to get going here. Information here is provided for general information purposes only. Should not be considered individualized recommendation or personalized investment advice. Now, paper money software application is for educational purposes only as well. Some additional slides or some additional information tied into that specifically, as you can see there. Now, investing involves risk, including the loss of principal. With that, I did put a little note in here for some futures because we will look at some futures today. And we're going to see some impact of some of those too. So we'll look at some charts. We don't trade futures, but we do look at the charts. Past performance is no guarantee of future results. And there you have it. Okay, so let's pull this up and let's just take a look at our markets here right now. There we go. Okay, hold this guy up. Take a look at it right here. Okay, good. We'll go full screen so we can see everything right there. And there, oh, let's see, 1 second. Just 1 second, folks. Let me do this. Let me pull up something here real quick. I've got to reload this. I apologize for that. I'll do that very, very quickly though here for you. I did notice in the chat, yes, we are seeing, and by the way, a quick note, says JD, JD, is he's looking at silver, platinum. You know what's bounced back this week have been the materials and materials sector specifically. And what we've seen with that is that group on a sector rotation basis. We'll take a look at that for sure in just a second. But it's been very interesting to see how that has jumped up. And what's really going on is you're getting the underlying commodities that are lifting up that group. In other words, if we're seeing strength within these different sectors, what we'll end up getting, different commodities, we'll see strength a lot of times within those materials. Copper's been strong too. I'll add that to your list there, JD. Copper's been up there. And so keep all that in mind. All right. Let's see. I'm just going to do this real quick. Okay, so here we are. And I pulled this up and there it is. Now I still can't drag it. Okay. It's not letting me drag this thing, which is really weird from my other monitor, but I'll try it again here. There it goes, finally. Thanks for your patience, all. All right, here is a look at the S&P 500 index. Now, a quick note on the S&P. We are above the 50. The trend still remains intact. Folks, right over here, I'm going to zoom in on it too, because you guys know exactly where I'm going with this. It was right there. It was right there. We had the 25 basis point cuts, which was 3 basis point cuts this year on the rate. And we're looking at about a 3.5 is what the Fed's projecting, a 3.5 to a 3.75 range right there. We had the cut, which I thought was an interesting area. Because oftentimes that can stimulate the economy higher. Because if money is cheaper in a sense, it's easier for companies to borrow and reinvest in the business and generate more growth. Okay, if you look at this, it's still looking like that bull flag, kind of like a bull flat through here. And sometimes those can be some of the stronger bull flags. In other words, Prices will oftentimes rally if you don't pull back very much off of a sideways move like that. And that was our bar right there, BP. The basis point cut, we jumped up, we pulled back a little bit. We're still testing that range. And that kind of made me wonder just a little bit. So just to throw this out, we're trending up, but we cannot ignore, it would not be good to ignore the longer term resistance that is still there, 6,900. So one of the things, because the way I used to trade a long time ago was, as I would say, oh gosh, great, we're recovering higher. It's bouncing, it's going to go higher. And then inevitably, I go, oh, dang it, it dipped back down. One of the key reasons is that you were getting prices coming back to resistance. If you waited this, if we're looking at this and it's been this long off the bottom, and traders are trying to consider, are they going to take a potential flag trade to the upside? Folks, sometimes you don't have to wait too long to get to resistance. I mean, you're literally right there. So getting above this point and not giving up too much of a move could be interesting. And we could see this pull into maybe sort of a seasonal type play in the markets. And that would be one thing I would just highlight and mention to you guys, that we could see a seasonal move higher towards the end of the year, just that seasonal drift. We'll look at those in just a second. You can see over here, we've been waiting all year, and there is finally our annual grid line right there. That is the end of the year, right? Will we get the Santa Claus rally, which some refer to it as, or the year-end rally? That remains to be seen, but it is interesting. And thinking about it, you say, gosh, that could have fueled the basis point cut, could have fueled that higher. We shall see. But some might just want to wait to see if it can get above resistance, because it's still been a little bit fussy around that 69 level, 6,900 level, that is. Here, folks, is the VIX. It's the volatility index. I wanted to show you within the VIX itself. A lot of times when you get these moves back up to these larger ranges right here, really, I guess I'm saying just basically above 25. There are a few additional touch points below there. Well, there's one, maybe two. Then it'll be touched off. But above 25, if the market hits that and comes back down, you tend to get these long drifts coming down. And as that happens, that could be a positive for the markets, because remember, the VIX just frequently, it moves inversely to the SPX is what it will generally do. And so as this comes down and maybe consolidates for a long period of time, this oftentimes means that the markets are just climbing that wall of worry higher. And that could show some strength towards the end of the year. I wanted to bring that out because I think it is an interesting point to note on this, okay? Yesterday in my ThinkScript class too, I wanted to say, before we move into our other material, I ran on it just a basic golden cross. If you guys haven't seen this before, I'll share this with you. I'll kind of highlight where you can find that and more information, as well as some other coding. But it's interesting to note which companies are actually getting a golden cross right now, because could we see enough strength to maybe get, let's just say we've had a longer term move and some of the companies might be kicking in gear right now. It's generally after a strong upward move and a pause that you might get the golden cross, and that is the 50-period moving average trading above. Okay, so just greater than the 200, but not just greater than. We're actually going to say crosses above. That's a different story, like in a period of time. So what I'll do is I'm going to point that out to you and just show you over here how we can quickly do this within a scan. You know what? I'll just do it so we can just all go through it real quick here. Here's the study, because it is an interesting time. It could help to push us up higher if we're getting enough information. I should say enough. Well, sure, enough information that's pushing, or enough buying that's really pushing some of these other companies in the S&P 500 higher. Maybe those that haven't participated in the rally yet, right? Getting a little bit more market breadth, because the Mag 7 is just kind of, few of those are down. And so we don't know if we're going to get those moving it higher or not. A quick note, I'm just going to go into the condition wizard here, folks, and just quickly show you how we can do this. So you can go to study, and we'll just say a simple moving average here of a 50 is crossing above, key point, crossing above a simple moving average of the 200 is generally the one that traders will look at. That's sort of the longer term golden cross. So the 50 above the 200, you guys see it? 50 crosses above the 200. And I'm just going to say in the last like 3 days or 3 bars, where you look at a daily chart, but the last 3 bars. That's it. That's our code right there. And you've got it. Click OK. We're running this in the S&P 500, in the Stock Hacker, as we are in the Scan tab. We have 8 companies. You recognize some of these? These are not companies that are in the Mag 7. These are a different set of companies here. If we just pull up a couple of these to get a general idea of what's going on, I'm going to highlight this for you guys. But say, for example, here's Prudential. Here's Schlumberger as well. PRU, haven't looked at PRU yet. PRU, there you go. Okay. Seeing anything interesting here? Remember, golden cross happening within the last few days. We're seeing a few companies that look like this out here, and I think it may be making a difference in the market. It could for going up higher. It could help fuel it to get us moving. And of course, if it gets moving, then that could put a lot of sort of a risk on situation, and maybe we just get bullishness towards the end of the year like we on average have done 5, 10, 20 years with seasonality. But if you look at this over here, I just painted it on here so you can see it. Oh, I got both of them are blue, light blue, dark blue. But anyways, you got the 200-day moving average here. You've got the 50, and do you see the cross? You do see the cross. That's oftentimes after an extended period of time, and you get the rally, and that was a rally indeed. That's a rally. Sometimes these will continue. Here's just a look at the weekly chart on this. It could, I mean, look at this upper range. Maybe it consolidates and shoots up again, but all else equal, that could be a positive. You know, another one we saw over here was SLB. Used to be called Schlumberger. I saw this yesterday. It is now SLB Limited. And it's like these long-term cup and handle patterns almost. Hasn't handled quite yet if it does. But do you see what I'm saying? We broke above a range. We're getting some strength coming in on a lot of these companies. This one, you know, specifically tied to energy. A quick note too, I might want to add here is that this, you know, think scripts aren't guaranteed for timeliness or accuracy, but as long as the data that's flowing through the platform is correct, they should just, you know, react to the mathematic code behind here, like we plugged in. I'm going to go ahead and just share this with you guys right now. So you have that. I'll put that right into the chat, but that is the golden cross. So, you know, indicators, different indicators are timely at different times. And this is one that could be interesting, and I'll show you why in just a bit. But yeah, this is very interesting to see what else is going on within the markets here. All right, let's do this. Let's take a look at some sectors first. I wanted to show you guys that sector rotation that we're getting over here. Oh, let's pull this over. Here's materials right there. Oh, let's see. Now I'm blowing it up. Okay, I'll pull that back down again, and zoom, zoom, zoom out. Pull it down. There it is. Right click, activate. There we have it. Okay, it's always the right click and activate here. This is a key one, actually. Materials has been bouncing higher. Financials, let's highlight these. Put a few of these on your radar, because one of the things we'll say, and we saw this early on, well, a couple months ago when we were talking about it in healthcare, we saw healthcare do something very similar to what materials is doing off the bottom right now. What is the perceived bottom? And that is they're making a higher low. And sometimes if you get that higher low in here, you might be on the verge of a bigger rally, possibly. We don't know, but we can say relative to the S&P 500, because we're using relative strength here. This is not materials moving. This is materials moving relative to the S&P 500. So it shows where the real strength could be out there. Okay? And what do you see there? Do you see how we're just breaking above highs? I do want to look at materials. It was mentioned in the chat, a few different things. Could be a very interesting level for us to scan within. Now over here, look at financials right there. It too, very similar. Do you see it just kind of got a little bit tighter and broke out? showing some strength. Discretionaries going down the line. Staples a little bit. Healthcare, a little bit coming back. Industrials clearly. Tech down. And that's exactly where our Mag 7 is. Not all the Mag 7s are down, Magnificent 7s, but like more than half of them. Some of them are showing real strength. It just happened more so this week. It kind of shifted down after Tuesday pretty sharply. But the Mag 7, which has fueled the rally thus far, is going down while these other sectors are participating. So if nothing else, we can kind of keep an eye on maybe some of these other sectors for potential strength out there that we might see with given stocks. There are ETFs that you could look at within each of these sectors as well that could be of interest too. Everything else down at the bottom is just down, down, and down. But maybe these three, maybe some of the strongest with materials, financials, as well as industrials. So keep that in mind. All right. I do want to do a quick scan just to show you how we can look at that as we come over here and take a quick peek. All right. And I appreciate it, Cam, thrown in. Yep. Shared links are not guaranteed for timeliness or accuracy. That is absolutely true. Let's go ahead and take a look at this, though. I'm going to take this guy off and just scan within the S&P 500. So those same companies that are maybe within materials, we'll go over here into industry. There are your materials right there. Folks, this is what's been moving. So great. We're intersecting. We're in the scan tab. Stock Hacker. Got to have these first or we're never going to make it to where we need to be. Scan in the 500 and then in the materials right there. Okay, that's how you narrow it down to see exactly where that sector rotation has been. Next thing, we can just take a look at our 5% change, and we have that. I've got some PEs and yields in there too to take a look at too. But if I just click on that a couple times, what's really been moving, folks, right there? That's chemicals. That's a chemical firm. Newmont Mining, that's a gold miner that's based out of the U.S. Or let me just say it this way: the almost all of their gold mines are in the U.S. But I'm not sure if they're based out of the U.S. I think they might be. Anyhow, going down the line, I don't know about Solstice here. ALB, that's lithium production. Okay, up almost 6%. FCX, Freeport-McMoRan. Now that is what you're going to find there. It's about 85% copper, 15% gold in terms of the generation of the revenue. Dow is a chemical. Steel is straightforward. On down the line, you get other steels in here as well. Oh, I could just do this. Whoa, I had a column for it. But you guys get a sense right there what's going on. It does say specialty chemicals, but these guys, that is specifically lithium right there. Okay, well, let's just look at some of these right now and see what they're looking like for potential opportunities. I have a general idea what gold miners are going to look like in general, but here's MOS, Mosaic. Look at that. Isn't that interesting? Okay, it's barely moving right here. Barely. But percentage-wise, it's a big move. And oh, I drew that a little bit low, but there you go, right there. Yeah. Maybe a triple bottom over here. Maybe something to keep an eye on. It's been down for a little while. Is it ready to turn for this company? Could be. That's one we could consider. ALB's already had a pretty big run. Lithium bottom kind of over here and has been really taken off. And then, of course, we have we've got some others. We've got in there too, just NEM. But I'll let you guys go through it and take a look at this. So here you go. This is with gold being higher. There is your NEM right there. Will it break out from here? Will it kind of consolidate, retest, or whatever the case might be? Could really depend on gold prices right there. Does gold break out? It's kind of giving us a little bit of a shooting star today. Where at? Well, right at resistance. If this pulls back, if the value of gold drops, then oftentimes the gold miners will as well. So it's an interesting thing to look at, to kind of keep in mind there. All right. So keep tabs on that. Yeah, so some of the Mag 7 that have been kind of setting up here, maybe, for some more moves. This is one we did a swing trade in on Monday, and that's this pullback right there. See this Apple trade? I've got this little line in here. That's the projection up to right near 300 for the potential flag pattern. This might be maybe the strongest trend that's actually holding on prior highs. We don't know if it's going to flag and go higher, but it's a flag kind of formation right now. Will that be one that goes? The other one that was somewhat strong, let's see how it's doing this week. Google, you can still see the flag there. Not a ton going on there. Amazon had one after it had been down a little ways, and there's the flag projection there. So these are just levels that I put in on that class that we've got. But then you have, as I see mentioned here, Meta. Wow. That's a big shoot. I'm not sure if it went all the way to 700 today. It could have, though. That's a pretty big move, obviously. Yeah, MSFT has been weak as well. Made a lower high down here. Don't know if it's going to recover or not. Bit of a bear flag right there, maybe coming down too. So yeah, some things to keep an eye on for sure. On that Apple, just as a side note, I taught this class yesterday, which looks specifically at trends that were up, higher highs and higher lows. If you guys have heard of Jesse Livermore. Now you have if you've been to my class yesterday, but this is this is how I found Apple. Basically over here, I'm just going to add this guy in. It's a lot of scripts to share. I'll just show you the class afterwards, but this is basically, he just looked at a high-low pivot, what he used to look at, just generally speaking. And notice you're getting one right there. And basically, you get one right there, and you get one right there. Basically, if you look back, you can see that you're getting them after prices have jumped up and pulled back and made a new high, a higher low, higher low, higher low, higher low. That was a higher low in a flag pattern, but it still dipped down to the prior highs here and then here again. So we'll find these, but it's just looking at a higher low after a pullback, something that's kind of unique. This is a guy that he lived to 1940. Famous trader had amassed a fortune trading this way, just using the ticker tape. So you guys might find this informative, perhaps useful. I created a scan on that as well. If you guys want to take a look at that scan, it might be useful for you in this class as we're talking about some of these flag type patterns. But you find that over here in our Trader Talks channel, and encourage you to subscribe to this channel. If you're not already subscribed, love to have you on board. Right there, we did hit 174,000 subscribers. So keep that in mind. Got a few videos there to take a look at, as you can see. But we have a lot of classes that we have in here. Down below, if you scroll down, I just said this, the classic trend strategy from a pioneer. I'll go ahead and just throw that into the chat box here. Let me just make sure that that is the one I've got too. I want to make sure I'm giving you guys the right link. I've got that code in there. And by the way, I do have in there the other code. We talked about how to build that golden cross as well, if that's of interest to you. And it turns out I don't have that one. Okay, well, let me just click on it. I'll show you guys. You get a full playlist in here you can take a look at if that's of interest to you. I'll throw that one into the chat as well. But we've got all that listed with all of our classes. You guys can check it out. So here you go. This is the Jesse Livermore. If you've studied any of the original market sort of traders, he would be in that list. This is the class, and you'll find that information down below in the scan, under the description under more. Do you guys know where to click for that? I better show you just so you can see it. But I mean, I discussed it in the, actually I show it where it's at in the class anyhow. So there you go. If you want to take a look at that. Quick little note on that, but so it is interesting to see if we'll get a continuation, folks, of these prices going higher, more broadly speaking. Let me show you what I'm referring to right here. Let me go back into our markets and sectors. This was really, really interesting to see on the NYSE this week. We actually made a new high in the advancers and decliners. So if you think about the NYSE, about 2,400 stocks, 2.4 plus 100 stocks in that group, they began to break above highs. Now, we have not yet done that on the SPX. We came close We haven't done that on the NASDAQ either, right? The NASDAQ has not done this. All right. And we've begun to trend higher on the McClellan Summation Index. So we might see some strength, but it might be coming from that smaller group, the equal weights. These guys, the SPX, just add the EW on at the end. SPX, EW, equal weight. After the SPX, SPX. That is a symbol. We broke into high territory. Now that is market breadth. That was surprising. Those golden crosses that I was talking about, folks, these are the laggards that are now starting to break up and show strength in the broader market here. This is for the S&P. So the S&P equal weight, the NYSE, a bigger basket of stocks, started to move higher. Okay. This over here, in the visual, see the 500, these big blocks, the Magnificent Seven, right? There's another one there. There you go. These big names, tech related, many of them semiconductor related. They've accounted for a huge portion of the market move, but a lot of those have not been doing too well. They've been down and downtrending. But breadth, if you equal weight everything, we're starting to see some strength, which is fascinating. You know, I think a lot of people weren't expecting that. Okay. More on that in just a second. Before we get to that, some additional information. We've got the Hindenburg Omen giving us those spikes. Remember that? The 52-week highs and 52-week new lows. If you're getting a big enough number of those, you'll get a spike. The reason why we're not is we're not getting as many lows because market breadth is strong. A lot of companies are actually making new highs right now, despite the market making a high over here. We've already broken out on the other companies. This is a 5-year weekly, by the way, so you get a general sense of it. But what it gets concerning is when you start to break down, which we did not do yet, and we haven't done. We might still, it's possible, but we haven't. But if you start to see this sort of a pattern occur, just like this over here, when prices start to come down, that can foretell future weakness. And oftentimes you can see that going, and it can really lead to these long extended downward trends, folks. This is a weekly chart. This started to occur, back sometime in like February, and it ended sometime in October. It was down that year. 2022 was a tough year, but the Hindenburg Omen nailed it because you had a lot of weakness and strength in the market at the same time. Some were making highs, some were making lows, and crashed. Okay, so there that is. And here was our other breadth indicator. Look at that. That right there is the NYSE that we're looking at. The NYSE. That's the NYA. Is the symbol of it, and you can see it right there. Take a look. New highs. Just like the S&P 500, it's the equal weight doing it, and we did just barely eke out a new high here. Although it's not a huge move, it was a big move off the bottom. So that tells us that there was a lot more companies in the New York Stock Exchange, 2,400 plus stocks, that were making new highs during the year. A lot more. Look at that. That's a big move. So that spiked all the way up to this level as we did, kind of break out a little. So that's real positive indications of breadth in the market. And a lot of times traders will say, you need breadth in the market. You need that consistency in order for prices to continue to remain up. Okay. Yeah, the Hindenburg Omen. So if I line it up, you can see that this was really occurring, and it's the week after week that we're kind of concerned with, which we did get over here at the top, and we got a little bit of a minor pullback there. Let me just line these up. So this one, and this one line up with 1, 2, 3 up here. We dipped a little bit. The real question is do you make a lower low, lower high, and then another lower low? And if you get that with those omens spiking over here, it can really help to influence it. It can't, I mean, that's what traders will use it for a continuation of a weekly downward trend. Yep, let's look at the small caps too. Good point right there in the chat. Before I do that though, real quick, a look at our seasonality for the possibility of strength to the end of the year. It's important consideration. Do we add to positions? Do we put on new positions? That can really depend upon what our expectation is for the end of the year. Now, normally, this is a 10-year I've got up. You tend to get a little bit of a drift up higher. A drift. Will we get it? The markets dip pretty good here, folks. November, oftentimes the strongest month of the year. 5, 10, 20 year, you'll see this being one of the strongest, if not the strongest month of the year. And it wasn't this year completely, because we dipped back down. It was almost, close to break even. So will we bounce back to the end of this year, which is what? Producers were just telling me it was, I think, 12 days or something till Christmas. It's coming up very, very soon. The end of the year is approaching, but yeah, a lot of times it'll push towards the high right at the end of the year, as you can see with that seasonality. This being December down here, right? On average, 5-year, 10-year, 20-year average, folks, you're going to see something very, very similar to that. So that's the question. All right, because we know if the markets are strong and they're pushing to the upside, well, what can that do? What does that do, right? If the markets are strong to the upside, it can create a general lift, for a lot of the companies, because what are we looking at? We're looking at the market. 500 companies, something's going up, or we can at least spot it. So that's why we're kind of spending time on that there. Here's a look at the 30-minute chart, though, and you will see this, just to get a little bit more visibility as to when we could potentially break out of that level, what's happening, right? Because those are the highs we've just kind of been pausing at here. We did make some lows. We did break up, and we're going to hold those lows or not, and maybe fight higher next week. That's going to be the question. We're keeping an eye on that, right? 30-minute charts can be very, very helpful in those regards. I don't expect all of you to use that, but it can be enlightening. When you can put more data, you can see more data, what's going on behind the scenes. In fact, if you come over here, you'll see this. Let me go out here to here's 180 days on a 4-hour. Not as much data. It's looking more and more like the daily chart, but you can see if you narrow that down, you might be able to see little patterns that could be starting. Okay, one area you'll see here, this is a crazy symbol. It's long. It's NASDAQ NDX XE Fred. And what it is just the equal weight of the NASDAQ itself. Now, we saw the S&P 500 equal weight shoot up, right? Make a new high before the underlying index. The NASDAQ, though, specifically the NASDAQ 100 is what we're looking at here. It did not make a new high. It's right around this level, and I think it's probably just in line. So technology, which is what the NASDAQ 100 is really heavy in, it's weighted heavily into that area. That could be an area that could be hit or miss, right? Perhaps we're not getting the breadth, the potential pull higher from market breadth here. So it's a very interesting one to keep an eye on. Tech has been one of the strongest, but you guys, as you know, let's hit that in just a second. But as you know, as we looked over here in our sector grid, tech right there. Let's go full size right now. Here you are right there. Maximize the sell. So these are all the tech companies in the S&P 500. So just really, really narrowing down tech. What do you see there? Well, let me just draw this out, big picture, just using even a line chart. Oh, that is my mouse totally sliding off the screen. This should be a more straight line right there. We had a new low, and that could be also considered a lower high. Question is, are we getting close to a lower low here? I have to say, we might be getting dang close to a lower low. Now, it could stop, but that's a big rapid move to the downside. Tech might not be a strong area. Now, things can change quick in the markets, but we're just looking at the data, what it's showing right now. NASDAQ breadth, same. So even if you're getting all those companies, some that aren't even in, it's not even enough to offset what the tech's doing. So just keep a watch on this. I mean, it could be an area that could be of key interest to you guys, over the next week. Okay, what I want to do is I want to take a look and see where we might have seen some additional strength. within just a different way to look at this. I'm going to go back to our market watch. Folks, one big thing we can do is we look at, oh, there's the Mag 7 right there. I did send an X post out on this as well. You can see over here, this has been the performance year to date. What's really been the top performer? Alphabet, 63%. Can you believe that? The company's gained 63% this year. NVIDIA, about half that. And then you've got about half that, close to it, with the, collectively speaking, the entire Mag 7 right there, as I've got listed right there. Do you guys see it? So that's the entire Mag 7. Then it just goes down from there. Amazon only 3% this year. By the way, a quick note, if you want to just keep tabs on the Mag 7 itself, what has been moving the market historically. Like I said, Apple really showing the biggest strength there, but just do this. Just add them together, all 7. This is Apple plus Amazon plus Google. If you do that, you can create your very own Mag 7 just grouping of stocks, as you guys can see right there. So that's a look at the Mag 7. Wow. That's the one of the weakest of all, yet it's been so strong for so long. So new low, lower high. Will we get another lower low here? That's the real question. You guys can watch this. This was thrown in the chat as well. The small caps have been showing some strength as well. I call that, you guys, I call that market breadth, because the Mag 7 is really, we're looking at some of the largest companies out there too, just in terms of market weighted. That's what's moving, what has been moving the S&P 500. I mean, it can move them more just because it's more weighted towards market weight, market capitalization. And that's what we've been seeing. So stepping outside that, yeah, you do get the small caps, and the small caps, like the Russell here, they have tended to lead the way up or down. Oftentimes they could be first out of the gate. So very, very interesting here on this move. Let's just back it out to the weekly just to see that. Oh yeah, see, it's already into potentially a high range. Will it continue to break above there and go? Well, could be a very, interesting area to keep tabs on, just to keep eyes on it. See what happens with it as you go through it. Okay. All right, let me just pull it up. I think we've got through. Cam's been hitting a lot of these, but yes, if you guys like today's presentation, if you get value out of these, smash that like button. Just lets the YouTube algorithm know that this content's useful. Lets me know that you guys are getting something out of this. That's the goal of our discussions here, of course, that you guys get something out of it. I did want to take you guys to our earnings beats, and let's just see how they are doing. Let's go over here and pull it up in, let's see, I'll go right click and then customize, and I'll just go into beats, right, that earnings beats. I put in a percentage as well, right there. Click OK, pull this guy over, and you can see, not in the Mag 7 necessarily, it just shows zeroed out, but I want to do the S&P 500 so we can just see what beat this week. And this is a beat on companies that have, it's a non-GAAP, so it's actual numbers. And what were those percentages like? And I think I'm running it over the last, hang on a second, 5 days or so. 20, it's 20 right now. Let's just see. I don't know if we had too many things going on. I'm gonna go the last 10 days. Let's just see. Let's look at those companies right now. Boom. Okay. So these are the percentage beats you're getting. We'll organize them by strength or weakness. First of all, if it's zeroed out, those are companies that did not report at all. But if you see green or red, it takes a second to load these up, but I want to give you guys a sense of this because some of these that have been showing earnings strength have been doing okay going forward. Oh, you know what? I got to knock these out real quick. Hang on a second. There's only so many lines that it's going to enable you to take a look at. Again, this is a script, not guaranteed for timeliness or accuracy, but you can check these off the platform. The big winner was CrowdStrike. Had a big earnings beat right there. Synopsys, Oracle, Salesforce. Oracle had a big beat, but man, the stock did tank. And sometimes it's not just the beat, it's the guidance going forward as well. Adobe was interesting. Adobe gave us what some traders will look at as the turtle trader, trading above the 20-day high, and sometimes that can be one of the earliest signs that those turtle traders used to use right there. So if you point to it, there's your earnings beat right there. 439 estimate, actual number came in at 5.5. Will that be enough to reverse this trend on Adobe? Ooh, I don't know. That's a long downward move. If it did, it might have some nice upside potential, but it is a $350 plus stock right there. But that was on the list of an earnings beat. Some of these other names too, you might recognize in here. Costco beat by about 5%, 5.5%. Dollar Tree, Ulta, Lululemon, Hewlett did, huh? And AVGO. Real quick, I want to take a look at these. AVGO. It beat. Take a look. Let's just confirm that it did beat. Yeah, $1.48 to $1.95. It beat, but remember, it's also about their guidance. They could say we had the best quarter ever, but next quarter, gosh, we don't think it's looking too good. Well, a lot of times the stock price can fall on that, right? So you always want to go in and just take a look and see what's going on there. This one obviously falling. We can put the percent change over here and just see what's up. This one, Lululemon's doing pretty good. Oftentimes this is guidance going higher. You have to kind of look into it, but there you go. That's how you can spot these guys. And sometimes it takes a change in earnings to really get us going out of our base. You guys see the possible pattern there? Just clearing that big round number at 200. Whew, by the way, this guy's been down for a little bit. Am I seeing that right? Folks, that's 400. Yeah, we just hit 200. That's a divide by, half there. That's a big decline. Maybe if it does, we get a bit of a cup and handle with oftentimes a positive earnings change, right? Sometimes you'll see those. It takes a lot to get us out. But if that happens, maybe sometimes you can get prices going up as well. For anybody that is interested in something like an earnings beats or whatever, I do have that listed as well. Those are all on that same ThinkScript group of classes. If you haven't seen those yet, you might want to check those out. But we do have earnings in here. Just Control F and then earnings, and it will pull it up right there. Earnings beat notifications. That was done about 3 months ago. All right. All right, everybody. Well, hopefully we looked at a few things here that might be of interest to you as you go through and take a look at the broader markets. Remember to keep it watch, though. What could really be key guide is, how do the Mag 7s do relative and market breadth relative to the S&P 500 here. And as we're sitting right at resistance here, oftentimes you do need to get the break above that point, and that's just going to be factual. You got to break above here first in order for a run to occur or even to go up for a little bit. So it's interesting to see what will happen come Monday, but hopefully it'll give you some tools to look at here, market breadth tools as well. And remember, these grids that I show you, you'll find those. Like if you're looking at a particular class, just a quick note, I got to point this out. I'll show it to you guys here. You'll find those down below right here under the video too. Click on more and scroll down, and I'll have that information right down here. Just like I did on that Jesse Livermore stuff right here. So just go down below and you can find that, but that'll be for this class specifically, some of the grids, etc. So I will get follow-ups on those from time to time. Folks, that's what I had for today. Hope you guys have a fantastic weekend. I guess this is the last class for the weekend. Have a good time. Thank you so much, Cam, for your help. Thanks to our production crew for helping us move forward with this. Be sure to give us a follow on X. On that note, take care, everybody. See you next time.